Now for a closing keynote conversation, an activist icon's view on markets and the future. Please welcome Kaaarl Eikon, Chairman, Eikon Enterprises, and interviewer Stephen Bertoni, Assistant Managing Editor, Founders, Forbes.
All right. Hey, everybody. Hey, Kaaarl.
How you doing? You see me there?
Yeah, you look like the Wizard of Oz right now, like the big floating head in front of everybody, so you look good.
Yeah. They call me the Wizard of Oz anyway.
Yeah. That works. Well, thanks for joining us. We have a great room, and so what's on your mind? Let's hear about, the title is What Does Kaaarl Eikon Think of the Markets? And let's kick off with that right now.
Yeah, I think we have a real problem with the markets. I've been saying that, Steve, I've been saying that for about a couple of years now, in articles and whatever. I keep things pretty well hedged, but I have a very big hedge on now. I think we have a major problem, and I can go into it more if you want me to. I mean, why we do.
Yeah, please, of course. Give me a few bullets on what the specifics are that really get.
I mean, look. To begin with, we're trapped with this inflation. Inflation is a terrible thing. It's what brings down hegemonies. And you look at things simplistically. I look at it just very simplistically. That's where, if you can do that and sort of understand the markets that way, you should be successful over a long period of time. And right now, there are real problems because inflation is a terrible thing. And once you have it, it's almost like being drug dependent, and it's very hard to get rid of it once it starts. I mean, I remember the 70s, but it takes down countries, it takes down hegemonies. And I think Powell is very right to do anything he can to stop this inflation that's coming on. And the real surprising thing is that you haven't had it before, because for the last years, we've been just printing up money and just giving it out. And one of the major problems is, I think, and nobody's blamed them, but it's corporate America. It's the CEOs, rubber stamp boards, and the money has been very cheap. So they've been able to borrow money very cheaply, but instead of putting it back into production, they've taken that money, borrowed more and more, and bought stocks at very high valuations. And now it's time to pay the price of that. So you'll have more and more debt coming due or interest rates to pay at higher prices. And that is a problem as far as earnings are concerned. And aside from that, household net worth, I would say median household net worth is really non-existent in this country. So half the households have no net worth. And the other half, except for the very top 10%, I think are very concerned about what's happening. And they're looking at their net worth, which is the market and their homes. And you have to be very concerned about that.
Yeah, Kaaarl,
eventually,
I'm sorry. In this,
go ahead.
Yeah, in this kind of high inflation environment, you've been through, many decades, ups and downs. How does this environment affect what you do and how you play the game right now?
Well, we're very hedged, and as far as I'm concerned, short the S&P and short different companies. And what I look for are companies that have some hidden jewel. And that served our purposes. We find a company with hidden jewels that are either not well managed or the boards are rubber stamping too much debt or whatever. And we get it on those boards. And eventually, sometimes you have to replace the CEO. And a lot of these companies are doing well. So you take CVI, our refinery. Our refinery, I mean, it took years, but it's now actually functioning greatly because we have spent quite a bit of capital in it over the years. You know, we had to save it for going bankrupt. The government, in their great wisdom, with ESG, made refineries very difficult to make a profit. So a large number of small refineries went out of business. And I won't go into the details, but they penalize refineries and they tell them they don't want them. So unlike almost in any other industry where if you're doing well, you build more. If you're doing well in the widget business, then you build more widget factories. You can't build another refinery. You take CVI, for instance. You know, the refineries we have to replace would be, you know, $10-12 billion, I believe. I just, you can't put a number on it because you really can't build another one in this country. So you can't have that competitive element coming in. A lot of refineries went out of business. A lot of the large refineries, or the big companies, listened to the government telling you how terrible refineries were and stopped building them up. So today, what they call the crack spread has widened tremendously. The diesel crack, for instance, has gone up as high as $75 or $80, and that just means it used to be, you know, $20, $25. So obviously, our EBITDA has, for 3 quarters, has gone up to $800 million, I believe, or close to $1 billion. But then you can't really come in and say, well, these refineries, you know, should pay more taxes or something, because in the bad times, I must have put $300-400 million in to save that refinery or that 2 refineries when a lot of refineries went out of business. So now you're backed into an energy problem for gasoline and diesel. And diesel is very important today. Diesel now is used in Europe to generate electricity, which will stop eventually. And from the point of view of ESG, you have something called bunker fuel that is really, really polluting the water as we speak. So diesel is used to replace that terrible fuel they used. And then our refinery, Wynnewood and Coffeyville, the 2 refineries, we're able to produce fertilizer or help to produce fertilizer. So we don't need, with fertilizer, you need ammonia. You need gas to make the ammonia, you know, NH3. You need natural gas, except we're the only one in the country, and people don't understand this, that built this many years ago. We had the foresight to build it. I can't take credit for it, but it's there. And we were able to make it with something called pet coke. And so we don't need the natural gas to make the fertilizer. And we ended up owning a fertilizer plant, which is, the factory is right next to our refinery. And it's really fascinating. And nobody even wanted that 7-8 years ago, but we nourished it and we kept it going. We own 36% of it, and we own the control of it. And obviously today, fertilizer is the most necessary thing in the world if you think about it, especially if the Ukraine keeps going and they shut off these things. And we are the only one in the country that can make it without natural gas. So, I mean, we have all these little jewels at CVI. I'm just using one example of what we look for, and they're coming to fruition.
Yeah, and also, so, speaking of finding those gems, you just made a play. You bought a big stake of Crown Holdings. You just bought a big stake of aluminum can company today. Tell me like really quick summary, what made you do that move?
Well, there too, you look for a couple of hidden jewels. I mean, it's in an industry that has natural growth because it's in an industry where you're getting rid of, slowly but surely, getting rid of plastic containers. So because of the environment again. And for some reason, the earnings of this company have not come to fruition. Their earnings are down. Well, you know, a lot of companies' earnings are down, but I think one of the problems that corporations do, and there are many good CEOs, there are many good boards, but a lot of the problems are that they try to diversify, or they try to say, I'm going to take over a company because I got this company, and you're going to get synergies. The synergies are very hard to get. If you look back in history, Jack Welch was good enough to get synergies at GE, but then look what happened. So they went out and bought different companies. We think they should just get rid of it and stick to the can business. I think there's a lot of things that you can do in that company. They're not badly run, but I think that many of this, but this whole business of diversifying has hurt their earnings, hurt their multiple, and eventually that company should flourish just by the nature of the business they're in. So stock went down a lot, and we bought a fair amount of it. We're going to try to. I talked to the CEO today. We'd like representation on the board, as we always try to get. We may get it, we may not. We may have a proxy fight, we may not. We haven't decided yet. But that's relatively small. We have a lot of companies that IEP. Right now, I just mentioned CBI because it sort of typifies what we do over the years to get the record we've had.
Yeah, speaking of record, I want to switch from industry to tech, and I went back 9 years, and I remember your first tweet you wrote, and that was back when you were in a proxy battle with a small computer company called Dell. This Twitter is great. I like it almost as much as I like Dell. And now you come full circle, because I've been hearing some rumors that, before the Elon Musk move, people were approaching you to maybe launch a proxy battle with Twitter before Musk came in. Are those rumors true?
Yeah, I was approached. I've been approached on different companies. I was approached. I looked at Twitter, and I loved it. I think it's a great platform. I think Elon Musk is the perfect one for that company. You don't have to be a genius to realize that he was going to finish that deal. He was up against lawsuits that he wouldn't have won in Delaware, in my opinion, the Chancery Court there. And so we bought a lot of stock in it. Well, I bought stock when it went down we were thinking of it, and then he announced what he was doing. The stock went down, and we loaded up with it. I mean, we bought close to, I can't remember exactly, 15 million shares, which is a fair amount to get when it was in the 30s. And I look at it two ways. I believe that he was going to do the deal. And if he did the deal, that's great. Because I do believe we go to corporate governance now. And one of the major problems in this country, and I keep saying it, not the only problem, because you need discipline as far as inflation goes, and we have that real problem. But one of the major problems is there's no corporate governance. I mean, corporate governance in this country is an oxymoron. Corporate democracy is an oxymoron. And there's an article today about BlackRock talking about it. And I hope my thing, and I know him, really does something, because actually these index funds protect bad CEOs or CEOs that are just there. And you don't have any accountability in corporate America. And in Twitter, I think it's sort of ludicrous that, I mean, I'm not going to get into the politics of whether or not you should have the right to censor somebody or not, although I think you really shouldn't censor anybody unless there's a real reason for it. But what's ludicrous is that a couple of people at Twitter who are employees of Twitter, they work for the shareholders, decide in their great wisdom who can go on the platform and who can't. And I think those days are over. That's just ludicrous. So I just looked at it and felt that I got a lot of calls about it. And so I said to myself, I'm buying stock here. If for some reason Musk doesn't do it, we'll probably launch a proxy fight. But what happened was Musk came in, and I said to myself, I said to my guys, I mean, he's the perfect guy for this. And I would, obviously have supported anything he did. I think he's, I don't know him, but I think some of the things he says and does, I think, are brilliant. I mean, I'm not in Tesla, but I never owned Tesla because, to me, it's not my kind of stock. It's just too high a multiple. But so we went in and bought all that stock, and we made a lot of money on it. But I'm happy about that. There's something inside of me that I wish I was looking forward to doing a fight on that one, because it's so outrageous. In other words, I'll just repeat again. Why, if you owned a chain of restaurants, if you owned it, Steve, your family gave you a chain of restaurants, and you have a major domo at the restaurant, would you allow him to say, I don't like that guy, he can't come into the restaurant, and I'll let that guy come in? You say, I'm going to fire you. I mean, so that to me, it just was a ludicrous situation. And I'm not deciding here or discussing the political aspects of whether or not you should have censorship. But I do believe that there is freedom of speech, which is extremely important. And yeah, there should be some censorship in certain cases. But it shouldn't be up to the employee of the company, whether he's called CEO or whatever he's called, to decide, I don't like that guy's politics, I'm not letting him on. So I was ready to get outraged, to get into it, but what the heck? I'm glad we made all the money we made on it.
Yeah, how much did you make on that trade?
Well, I can tell you it's public anyway. We made about $250 million, 200 million, maybe 250. And yeah, but we have a big portfolio in IEP. IEP this year is doing very well because, I've been smart or lucky in our short positions are working out and the long positions are sort of working out. So the net asset value of IEP has gone up so far for the 9 months, over $1 billion. So every year we try to keep ourselves long and short and look for those little jewels. And that's what we do over there. And
yeah. I got to ask with Twitter. I mean, you bought a lot of stock and then you kept on buying. And when Musk was going back and forth, will he buy? Will he not? The media was. There was a lot of people thought it would go through. A lot of people thought it wouldn't go through. It seemed like almost a coin toss. But you were confident the whole way. I'd love to get into your thinking there, where it's like I'm going to buy and keep on buying, and your gut said that it was going to go through. Is it you've seen this so many times, or?
You have to understand something. I think that the company itself is a great platform for this country, a great platform. And you look around at some of these other technology companies in that same area, I don't think they're that well run. So I look at it, I think Musk from the little I've seen what he's done, he's a perfect guy to run it. He's a brilliant guy and all that. So I figured he's going to do it. It's perfect for him. And all this bull that he didn't have the money to do it is nonsense. If you look at his net worth, and you look at his balance sheet, and you look at all the stock he's got, I mean, that was just completely nonsense. So in my mind, anyway. And in my mind, though, throughout this whole thing, he did pay a little too much for it, but not as bad as people say. I really think that company, because of what it stands for, is worth in the low 30s, maybe. So maybe he did pay a little more, today, but so maybe he paid a little more. But that's a sort of a rounding error for the guy. And so I figure, he's going to do it. But if he didn't, I was definitely going to launch a proxy fight. Well, not definitely, but close to. I mean, it wasn't definite. And I would have asked him to be on the board or be chairman or something.
Yeah, and say who would be your CEO of Twitter if it wasn't Elon?
They didn't call me because it's not my kind of thing. But if he had called me, I would have put $2 billion in that, with him, because I think he's going to do real well with it. But I probably would have wanted a preferred or something, But nobody ever called me, and I'm glad they didn't. But so that's basically that one.
That works. You mentioned you always have longs and shorts. You're always hedged. Could you give us a new long position and a new short position, or what would you pick right now? What are you looking at?
Well, I told you, like, to me, I really because of our positions here, it's difficult for me to buy any more of it, but we own so much of it. The CVI, I think, is going to be, there's things at CVI like that, like the stuff that we're going to be doing in the fertilizer business, for instance. I mean, so that's a good one. There are other ones I can't talk about at all because, the earnings aren't out and whatever that I think are cheap. I think Crown Company is really cheap in the sense that it's in an industry that is not going to be affected that badly, in my opinion. I mean, short term, nobody can talk about it, but long term, it's not going to be affected that badly in a recession. And in fact, it's growing. So you have a company that's growing, and it's hard to compete with that one too, because, you can't just go and build a can company. You have to be in an area because, when you ship these cans, you have a problem of paying for shipping because, can takes up a lot of space. So you have to be pretty near a large user of those cans. So it's hard to break in it. So it's barriers of entrance, natural barriers of entrance, which I like. Mm-hmm. And so you just look for that kernel. And then the other little thing is sort of the thing, I think, but that's going to be down the road, I think, but I think they should stick to their business. That's what I think, and not be diversifying all over.
Gotcha. Sorry, unfortunately we're almost out of time, and this has been a big day. We talked a lot about a lot of scary things on the horizon, things to be worried about, whether it's geopolitical, whether it's inflation, stock market. You've been shaking things up for decades. You've seen it all. You've heard it all. Could you share any wisdom or advice to the room before we go have a cocktail? It could be about life. It could be about investing. It could be about running a company. What do you got?
Well, I would just say that it's really funny. When I was in college as a freshman, I didn't know much about the market at all. I was always a little intrigued by it. I went out. I just was thinking back on this, and it really happened. I got into Princeton, and I came from middle-class background from a sort of bad high school. But I made friends with a couple of the wealthier guys, and as a freshman. And one of them invited me to dinner with his father. His father came up to see him. And his father was a big deal on Wall Street, sort of very well thought of, really very respected. And we were sitting there, and he looked at me and said, you have some promise, business, because I asked him a couple of questions about, Wall Street a little bit. And he says, one thing I'm going to give you, one bit of advice. Just remember this. Hey, remember this kid. He's a nice guy. Remember this kid. If you ever get into Wall Street and this business, follow one rule. And I'm not joking. This is what he said. Never fight the Fed. And I've learned that. So I will tell them my advice is this Fed and Powell, I listen to him. And he's a serious guy. And he's going to be, there's none of this stuff, all these guys are saying, oh, they're going to pivot and they should pivot and this and that. And, these guys that tell you that a lot of them are telling you that because they put all these people into these companies that are overpriced. And there are many good companies now, but many overpriced ones. And I am happy that Powell really means business. And I really think he does, because you must get rid of this inflation. And that's the worst thing an economy can have. And I think he means business. And I really respected him for coming out and saying it. And I hope I'm right. And I think there's going to be, look, I've said it a few times. I think it's going to get a lot worse before it gets better, perhaps. But all these people that are telling you he should pivot, you know what it is? It's like telling a drug addict. Let's say your kid's a drug addict, and telling him, okay, you took enough, you stopped drinking enough now. Okay, go have a good time again. Well, you can't do that, right? You have to get rid of the goddamn problem you got. And that's what we need to do here. And don't fool yourself. There's going to be a lot more headaches, I think, before we get out of this mess we're in, because you can't have the Fed, even if they want to. Over the last 20 or 30 years, the Fed was able to come in and save you and save the market, or they go into this taper tantrum. But they can't do it now, because right now, even if they wanted to, you can't keep printing up money, because it's going to just throw gasoline on the flames of inflation. So I think this is what you got to understand. However, there's some very good companies out there, and and if you're willing to buy them, and have the patience, I think you'll look back at 5 years or something, or less than 4 years, and see that they were great buys. But right now, I think they're very far and few between.
Well, this is great, Kaaral. Thank you for you said don't fight the Fed. I'm going to add another rule to that. I think everyone can agree is you also don't want to ever fight Kaaral Eikon either in a proxy battle. So we can add that. But thank you for being here again. For decades you've changed finance, you've changed business. I think I have notes since the year 2000 until now, 22 years. You've had an annualized return of 15% every year, which is blows everything else out of the water. We really appreciate you being here, and I'm honored on behalf of Forbes to give you our first ever Iconoclast Award right here. Can you see it? Although we should call it not the Iconoclast, the Iconoclast Award in your honor. So you said you had do you have a cocktail? You said you're making a martini. You have a martini there?
What, here in the house?
Yeah, you said you're going to have a martini for the award.
Have a martini around. Well, a little later. I usually play tennis for an hour now, and then have it an hour. So you do it now, and I'll do it in about an hour. Actually, maybe sooner.
That sounds good. Well, thank you very much, Kaaral. Appreciate it.